net worth is basically allocated right now to Solana. I moved some from ETH. I don't have much Bitcoin right now. Doesn't mean I don't like Bitcoin. I just think the others go up more. Simple as that. I own a bunch of high-end NFTs that I think I have another thesis about. And then beyond that, I do a bit of speculation and other stuff for the fun of it. But the time horizon thing is, I can see it freaks everybody out. And I've stepped back, and it was only in the last 2 weeks I've realized.
Earlier today, according to data from CoinMarketCapitalization, Bitcoin prices fell below $58,000 for the first time in 2 months, reaching a low of $57,168. The German Federal Criminal Police Office moved over $175 million worth of Bitcoin to cryptocurrency exchanges Coinbase and Kraken, as well as over-counter desks, after the sell-off revealed activity on wallets related to the now-defunct cryptocurrency exchange Mt. Gow. The defunct exchange's Rehabilitation Trust declared late last month that it will begin distributing the assets taken in the 2014 breach. The notice on the exchange's website also stated that Bitcoin and Bitcoin Cash will be used for the payments, and analysts cautioned that this would lead to some selling pressure in both cryptocurrencies, even if it was just momentarily. According to data from blockchain analytics company Arkham, Mt. Gow carried out test transactions earlier today, transferring roughly $25 worth of Bitcoin over 3 transactions to various wallets. The firm speculated that this test might indicate a plan to begin the redistribution process because big cryptocurrency holding companies are known to carry out similar tests with smaller amounts before executing larger transfers. The Bitcoin markets have experienced some turmoil as a result of this news. In the midst of the turmoil, and Real Vision founder and CEO Raoul Pal provided his updated outlook and expectations for the cryptocurrency market in 2024 and beyond. According to Pal, a crucial detail that most investors are ignoring is global liquidity. The CMC, Crypto Fear and Greed Index has dropped to 5, its lowest point in 2024. And the overall crypto market cap is also at multi-month lows. Conditions in a recent interview with Blockworks Macro, the well-known business executive in Macro. Analyst explains that liquidity is a key component of every cryptocurrency bull market, and that we are just at the point where liquidity conditions are expected to start to improve significantly, causing an immediate response in asset prices. Meanwhile, Pal predicts that most asset classes will perform well over the next 12 to 18 months, and that cryptocurrencies and digital assets will easily outperform them all. As we bring you some clips from the interview, please take a moment to like this video, subscribe to the channel, and enable post notifications for more videos like this one. Your actions greatly aid the YouTube algorithm and contribute to the channel's growth.
It differently in a way that I've started trying to communicate with people to understand this. And this is very pertinent to you. You know, if we're trying to take the 30-year-old as the demographic, the 30s to 35, and it's global, right? So what we've got here is a global utility, which is blockchain, much like the internet was. Now, unlike any of these global utility networks, trains, road systems, all of this, you couldn't invest in them. But because this is tokenized, you've got a behavioral incentive system to grow the network, which is the more people come onto the network, the more the number go up, the more people come on the network. And therefore, the more capital in the network, the more applications get built, the more the network gets used, right? It's fucking genius. And we've never seen anything like this, where we're all part of it. So here we've got this asset class, which is a globally homogenous asset, which doesn't exist. Gold is the only one, but gold, if you go to a village in India, the bid-offer spread is 50%. Here we've got tradable on a mobile phone in India, the Philippines, Fiji, New York, Vancouver, the Cayman Islands, the same thing. And it happens to be the infrastructure layer to the internet for the system, for value and storage, and it's that distributed database, which is a public service utility good. Okay, brilliant. It's a $2.5 trillion market cap today. If we just extrapolate out the trend rate of growth, it gets to $100 trillion by about 2032. Okay, so this is the biggest wealth generating opportunity in all human history. So you've got this in front of you, which is this whole how to unfuck my future. Part of it is this. The other thing is don't fuck this up. Never get thrown off this horse, because this is the one. This is the big one. This is the greatest macro gift of all time to get everybody out of this shit that they're in. So it's there in front of you. So then people are like, yeah, but what do I invest in? I'm like, okay, listen, detune all the noise. There's a bunch of decentralized businesses that sell block space. And they all have different types of block space. One's going, hey, mine's the most secure and the oldest. Somebody else is like, well, mine's the internet computer. And somebody's like, mine's the internet computer, but faster. They're just selling block space. So there's a bunch of companies selling block space or applications on top of that block space. That's all the space is. It's just a technology and it's an adoption. So our job within this is now not get philosophical and tribal about where do I invest in that technology and screw it up. Our job is to maximize the opportunity to the best we can. And that's a balance of how do you take risk? Because a lot of people go, max 10 risk. Like, no.
Yeah.
Look, if it's going for 2.5 trillion to 100 trillion, you don't need to take max risk. You can just capture the bulk and then do a bit of the tail on the side. And I try and communicate it, but people don't want to hear it is the point, right? This is a narrative-driven attention space. And so they just want what they can do. I made it very clear all the way through, hey, 90% of my liquid net worth is basically allocated right now to Solana. I moved some from ETH. I don't have much Bitcoin right now. Doesn't mean I don't like Bitcoin. I just think the others go up more. Simple as that. I own a bunch of high-end NFTs that I think I have another thesis about. And then beyond that, I do a bit of speculation and other stuff for the fun of it. But the time horizon thing is, I can see it freaks everybody out. And I've stepped back, and it was only in the last 2 weeks I've realized the risk, the real thing that's going on crypto Twitter, and why the banana zone resonates and why you get this backlash is this is everybody's hopes and dreams. It's everybody. It's yours, it's mine, it's everybody's. Right, so they're so scared of it going wrong, yet they're so greedy to get it right. This is the struggle that everybody's having. Mm-hmm. And people have PTSD from the last cycle, as the people did from the previous cycle. Right, the previous cycle was the blow off top and then the collapse. This one was the stunted top and then the collapse. And so now people, they worry about the cycle. Mm-hmm. I don't remember Jeff Bezos caring about the business cycle. He just owned his stock. If you're in a secular bull market, there is demand for the good that you produce, in this case, block space, premium block space, then motherfucker, you're trading it. What you should do is buy all the sell-offs. If it goes down 85%, you're like, hell yes. It took me a long time to realize that, because I too was the macro kind of cyclical guy. And I think, well, let's sell it at the top. So I think I can predict somewhat the tops from the everything code cycle and the usual bunch of stuff. But does it really matter? As a 30-year-old, yeah, okay, you might want a house. So there's lifestyle chips. Okay, fine. But I tell you, if you've made a ton of money and you take it off at the high and you nail it, you will not put the same amount back in at the low, down 85%. When everybody's calling you a criminal, they're going to shoot everybody involved in crypto. There's going to be the gulags for crypto investors. You're like, I'm not doing it. And you will end up screwing the whole thing up. The other one I was talking to Chris Boniski about is people are really getting concerned about, where does the top come? Is it early? Is it normal? Is it, every time it's always been December, but for some reason everyone's freaked out it's going to be a different time now. Okay, fine. And that's because of PTSD. But it's not that. I don't know. We don't know. None of us know. Is it going to be a bubble top? Is it going to be, it doesn't matter. What is the one that scares me is what happens if the correction in 2026, because we don't have 22, we don't have it, beating out of massive inflation and the pandemic stuff. Imagine if we just only went down 40% in Bitcoin and 20% in NASDAQ. This is kind of my favorite probability. Sure, there's a whole bunch of alts that are going to go down 99%. I'm just talking about Bitcoin. Everybody's going to miss the trade.
Pal is certain that the Fed's lagging indicators are the only reason it is still hawkish. He gives the example of unemployment, which he claims lags by roughly 12 months based on recent reports. In June, first-time applications for U.S. unemployment benefits increased, and the number of people on unemployment benefits increased as well. Rose further suggests a slow, according to Joe McCann, founder, CEO, and CIO of Asymmetric, a cryptocurrency-focused hedge fund. The labor market, cooling, and declining inflation. Data are keeping the markets optimistic that the Fed will begin reducing rates this year, possibly as early as September. It wouldn't be shocking if the central bank announced an emergency 25 to 50 basis point rate cut during the next FOMC meeting between July 30th and July 31st. Let's return to Pal's interview as he discusses the cryptocurrency sector and the $100 trillion possibility it offers. If unemployment and other indicators continue to decline or improve, markets will be just as optimistic and prices will rise sharply.
Yeah, I think so. I think younger people in the US can use their 401ks and dollar cost average on a 2 weekly basis, and they do that a lot. So I think that helps. It's not fully in swing yet. I also think that the ability options probably out by then. That probably dampens volatility, and just maturity and understanding of what the network is. That next time around, it won't be. It's all a scam. Mm-hmm. It'll be the business cycle, liquidity. Much like it. I mean, I can't see a big crash in the Nasdaq. Not with this unbelievable kind of mega trend of AI, compute, EV, robotics. All of that stuff. So a lot of them, if you go back to all of these business cycles since 2008, most of them have had stuff like the Nasdaq trading down 20%, down 25% for a year. It's boring. And I think that feels like, because the super narrative of all these technologies coming together is so big, and the capital, that it feels like that the biggest risk is it doesn't go down a lot. The sentiment has always been that ICOs had the same. Everybody in the last cycle had PTSD over ICOs. Meanwhile, stable coins are getting adopted by the fucking EU. I mean, the adoption of blockchain technology is undeniable. People, this go back to time horizon. They expect it all tomorrow. Why hasn't Google gone to a Web3 business and Meta? And why is the entire financial system not on new blockchain rails by the end of this week on my blockchain? I'm like, it doesn't work like that. It's all at the margin until it's exponential. So I just think it's a time horizon issue, and people are new to this kind of stuff of understanding both exponentials and long duration assets. But when I look back at my first Bitcoin investment at 200, I mean, what a different world. 200, but you didn't see it then. It's very difficult to see because of exponentials. But, pristine collateral is not likely to be the best performing asset.
Totally.
The safest asset is never the best performing. It's simple. There's a risk curve. Yeah. Now, it has performed very well this cycle, but it always does at the beginning of the cycle. So yes, I do think the Bitcoin business of selling their block space is pretty robust, particularly in a world of debasement of currency and sovereigns understand the game. So I do think it gets adopted more and more and more. It doesn't do anything else, really. Yes, we're trying to build rooms and ordinals and other stuff, but really it just does what it says on the tin. And that works really well. It's an anti-debasement machine that has adoption effects. So I do think that Bitcoin holds its narrative, but over time its dominance falls, just as the space gets bigger. So Julian Battelle and myself kind of used the term actually for last quarter last year. We said, hey, listen, liquidity's picking up. The pre-election cycle, it usually goes bananas. And then so we called it Banana Zone. It was the front cover of Global Macro Investor was Banana Zone. And then we started realizing, you know what, the macro summer and macro fall or autumn, that's the massive banana zone. And then you see that beautiful chart of Bitcoin every cycle and it goes vertical. And you're like, well, it just looks like a banana. And the banana zone says everything. It goes bananas. It looks like a banana. It's funny because it's kind of phallic. It's memeable. And so, but as I said, that is the banana is the big yellow candle of our hopes and dreams is all carried into that. And that's the liquidity cycle, the everything code cycle. If you want to use the Bitcoin halving cycle, which I don't really do, but it's all the same thing. It's all there. And this is the point. And it's all held in that yellow fruit.
That banana zone applies to it as well.
It's all so fucking mid-curve. I mean, I've explained there are two assets in a secular bull market, technology and crypto. Arguably crypto's technology, but that's it. So number go up the most. We've gone through the fastest period of change in technology in all human history. We've just brought into the world infinite human intelligence to the power of whatever. We don't even know to the power of what? The power of 10, the power of 100? We've just replaced humans by robotics. We've got cars that drive themselves. We're able to edit the human gene. We've got just La La Land stuff going on, the book of sci-fi novels. And these are companies with products. We're not even talking about them anymore. These are actually happening. And people want to invest in old stuff because, hey, it's cheap here. You're like, what are you missing? Do you really think anybody cares about your gold mine? Really, when you've got what's going on? Now, that doesn't mean all these stocks go up forever. It doesn't mean they don't go into bubble cycles. It's none of that. But it's like, if you are to choose an asset in a highly correlated world, choose the best performing asset. Let's say you don't trade crypto. You're doing yourself a disservice if you don't own technology. And I can hear people now going, well, he's just a bubble. It's all a bubble. You need real cash flows and real this. It's like,
I think people want to believe you, but they get hung up on fractals of what happened in 2000 and that sort of thing. But I do think people want to believe you. It's just they're like, oh my God, but what if look at all these grifters, or what happened to Cisco and all of that.
Yeah, and look what happened to Amazon and Google and Facebook. I mean, it's all mid-curve. And I don't mean that as an insult. We've all been there. It's like, once you simplify it all down, stop all of the monkey voices in your head. Filter out all of the noise from Twitter. It's like, is tomorrow more digital than today? Yes, no. If yes, continue. It's as simple as that. It's like, the world is going to be more digital tomorrow. End of story. So even if you do have a bubble cycle and then a crash, what should you do? You should buy more technology. Why? Because tomorrow's more digital than today.
Well,
I mean, it's really, I've really got it down to the most ridiculously simple theses. And it's embarrassing. I know it's embarrassing because people are like, this guy's a moron. I'm like, I've done, honestly, 35 years of work on this. I think I'm right, but we'll see.
In other developments, the Fed has been recommended by the International Monetary Fund to maintain existing interest rates until at least late 2024 and strengthen its fiscal situation by cutting expenditures and increasing revenues. In a speech last week in Washington, D.C., IMF Managing Director Christina Gorga stated that we anticipate core PCE inflation to finish this year at about 2.5%, where it started, and return to target by the middle of 2025. Although the IMF had previously warned that the Fed's wrecking bow would have a negative impact on other economies worldwide, we do acknowledge that there are significant upside risks to this path, and in light of those risks, we agreed that the Fed should maintain policy rates at their current level until at least late 2024. What do you think about the abrupt reversal, and when do you think the Fed is most likely to start cutting rates? Please leave your thoughts and responses to Pal's interview in the space provided below. Thank you for watching, and if you think this video is great, please subscribe to the channel and enable post alerts for more videos like this one.